The following is a paid commercial program. Unless otherwise identified, the guests on the program are employees of or otherwise represent the advertiser. The opinions expressed therein are those of the advertiser and do not necessarily reflect the views and policies of Global News Radio 640 Toronto.
And good Sunday morning to everyone out there. This is Your Life, Your Money. I am Chris Creston, and I'm joined as always by Kelvin, the money guy. He is one of the country's top financial advisors and just an overall great guy. You can visit his website, askkelvin.ca. That's askkelvin.ca, or you can call him 416-457-7526. That's 457-plan. Anyway, here's Kelvin.
Yes, good morning, Chris. How are you keeping? Everything good?
Good, really good. Yeah, you know what? There's not enough coffee for me today, but that's okay. I'll survive. Yeah. I can roll with it. I've done this before. This ain't my first rodeo.
Yeah. Geez, what a week it's been. Actually, 2 weeks it's been, in the world. Unbelievable.
Oh man, it's been crazy. You know, since the last time we did a live show here, a lot has happened, and there's a lot of changes, a lot of things that affect people's finances and affect people's lives, and of course, just affect our emotions as we sit and we look at what's happening in Europe, and it's disturbing on so many levels. There's a feeling that I've had before, and not to be on a soapbox here, but that I've been alive at the best time in human civilization. And I'm kind of getting shaky on that opinion these days. But there's ways that we can make sure that the things that are happening overseas aren't destroying our savings, aren't destroying our income. We've got to sort of keep our eye on the prize. And, unless we're oligarchs, we're able to kind of hold on to our possessions and hold on to our investments and move forward.
Yeah, and I mean, it's interesting when you look at all the studies going back in the past when wars happen and terrorist attack. I think people need to get their financial swagger back. And how they do that is by riding through the turbulence, making sure your portfolios are set up that when the rebound happens, which it will happen, you're ready for it, right? So let me just recap so far with our money. We came out of 2021, which was probably one of the best years we had in the stock markets, caused by the pandemic and things opening back up and so on. And of course, we're hit with inflation. And then now we're hit with the invasion. So what do people do? Well, the Dow Jones year to date is down about 9.5%. The NASDAQ is down 17%. S&P is up 12%. It's funny, our exchange here in Canada, we're up 1%. So we're not in any bad shape as far as if you look over the last 2 weeks, yeah. But if you stretch back over the last 5 years, we're still good. So Chris, let me just give you some perspective on what happens. Actually, give me something that you think in your mind that was really something bad that happened in the world. Looking back in the last, say, I don't know, 10 years, what do you remember?
10 years, wow, a lot has happened, but various natural disasters, various events that are similar to war, the Syrian civil war, whatever we call what was happening over there with ISIS and everything.
Mm-hmm. So the last one was we just remember was last year, 2020, the pandemic.
Oh, that
markets,
thing.
Yeah, markets
that
were
thing
down
that affected
30,
all our lives, right?
It's funny, yeah, how we forget, right? Because now we're opening up next week, I guess. The pandemic, the markets went down about 34%. Lasted for about the months to recover was about 4 months, and the year after, our money went up about 74%. But if I look back to say, like, I don't know, the Iraq War, the invasion, the very first time, the markets went down 14%, lasted about 2 months, but the year after it came back 38%. So if you look back through Desert Storm, let's say 1990, markets down 20%, took about 4 or 5 months to recover, and then the year after we're up 30%. So what history tells us is these kind of things that happen when it comes, take away human cost to human lives and so on. But if you purely look at money, it tells you that this is the time to reevaluate your money because we know it's going to recover. And when it does so with a vengeance. So I think this is really an important time to seek out your advisor. All those robo advisors and so on, they don't measure up to people like us because we give you the human side to what to do with your money and somebody to talk to. When you have an issue, you talk it out, right? So my problem now, I look at my money and I go, well, okay, I made my RSP contribution. I put in $1,000. It's now worth 900. What do I do, right? So you need to have those conversations with your advisor and get ready for some of the rebounds that's going to happen. Not probably, but going to happen. There's all kinds of studies and, history always dictates where we're going, right?
Mm-hmm.
When it comes to money anyhow. So reevaluating your portfolio is going to be the thing to do. When we're done with the war, whenever that may be, hopefully soon, inflation is really what's going to be our problem. Not really so much the war, but what happens with inflation. How is our money going to react? And how we relate to inflation is, I guess, the price of gas. Have you filled up
Right.
lately or no? Have you
Oh,
gone
you
to
know what?
fill
I
up lately?
drove right on by. I've got this mindset in my head that I'm sort of filling up at the rate that is marked at the gas station. So I'm driving at that rate rather than filling up. Even so, if I drive by and it says, $1.79 a liter or something, that's what I feel like I'm burning it at. Even if I was paying less for it at the time, I sort of think I'm burning it at the replacement price. I know that might not make logical sense, but that's sort of the way that I think about it. And maybe I'll make a few less trips or something like that. But I think for a lot of us who are thinking, it would be nice to get back to the office, we're thinking, nah, I don't know about that. Yeah. Well, and even case in point, I decided not to fire up my snowblower for the little bit of snow that we had this weekend because I thought, you know what? I got a shovel. I got some arms. I got some legs. I can just push this stuff around. I'm not going to burn this unnecessarily. If I can avoid having to go and fill up that jerry can before I have to go and fill up the lawnmower, which is going to be a whole other issue in the summer. All of those other things. We think about our cars. Yeah. There's so many other things. And I feel badly for the landscapers and for all the people who have a lot of gas-powered equipment that they're going to have to now. Obviously, if you haven't talked to your advisor, give them a call. If you haven't talked to your landscaper, maybe expect a call because your price might be going up this summer because I hear you. The price of gas is going to be inflating the price of grass cutting.
Well, not only that, you look at food, you look at housing, those kind of things that cause inflation. The last time this kind of inflation happened was about 40 years ago, 1982. So if you're 65 years old today, you probably remember what happened then. Price of gas went up, price of food went up. Back then was when the K cars started. I don't know if you remember those. You probably don't.
I'm vaguely familiar with the concept.
That's when they dropped the speed limit on the highway. Right. So a lot of those things changed, and now it seems like we're getting back there. So we have to kind of condition our minds for that type of stuff. Maybe kind of penny pinch for a bit, and get back to how it used to be. And ride through the storm, ride through the turbulence. And once we do, we'll be okay. Some of the things that's happening is, for every dollar that we have, we owe $1.86, which is a lot, right? Mm-hmm. It tells us that we really need to get our checks and balances in place. And as inflation goes up, there's certain things that we need to do. And then maybe after the break, what we'll do is I'll have a little chat about why you need to kind of make some tweaks and leave your money alone, and go from there,
Interesting. And that's one of the things we've talked about in the past. It's not necessarily timing the market, getting it right, worrying about the ups and downs of gas prices, worrying about the ups and downs of international affairs, but worrying about just sort of riding the wave and staying in the market, time in the market is the strategy that will win. We'll continue talking about that and a whole lot more as we navigate the turbulence and fly on through for the rest of your Sunday morning here. This is Your Life, Your Money with Kelvin, the Money Guy. Don't forget, you can schedule a meeting with him by visiting his website, askkelvin.ca. That's askkelvin.ca. A whole lot more of Your Life, Your Money continuing here on 640 Toronto.
You are listening to a paid commercial program. Unless otherwise identified, the guests on the program are employees of or otherwise represent the advertiser. The opinions expressed therein are those of the advertiser and do not necessarily reflect the views and policies of Global News Radio 640 Toronto.
And good Sunday morning to everyone out there. Thank you so much for making us part of your Sunday. I am Chris Cresson, joined as always by Kelvin, the Money Guy. And I just want to let everyone know back at Master Control that problem with my mic is fixed and I don't hear myself coming back anymore. So if I sounded distracted last segment, then sorry. If I didn't, then never mind. That didn't happen. We're talking about your life and your money. We're talking about the turbulence that is happening in the markets and the best ways to sort of navigate that and work ahead. Talking about some historical context on when there are terrible things that happen in the world and the effect that happens on the market and the rebound that is sure to follow. So that's where we come down to where the rubber hits the road and everyone's concerns about inflation, concerns about, of course, gas prices. They contribute to inflation, and also, concerns about, am I making enough money? So you go to your boss and you ask for some more, and that in turn contributes to inflation. So it's an ongoing sort of wheel, and it's, when we think about it, it can seem very daunting, but when you break it down and you've got the measure of history that you can apply to it, it's not that hard to navigate. And that's why it's important to have someone like Kelvin, the Money Guy, on your side. Don't forget to visit his website. That's askkelvin.ca, askkelvin.ca. Don't ask Google, ask Kelvin. And you can always give us a call live here on the air at 416-870-6400. And Kelvin, before the break, we were talking a bit about inflation and talking about the markets and talking about how to sort of navigate it in uncertain times. And I think that's where we will pick up.
Yeah. So when we look at, tend to look at money, and I always say live your life forward and your money life backwards. Within your life, lots of things are going to happen: inflation, wars, ups and downs with your relationships, with your kids, your spouse. All these things are going to happen. So you have to navigate through life. I help you navigate through your money life. And what you get with people like myself is these 30 years of experience of all these ups and downs. What we've seen is in the last 100 years, the markets went up 72% of the time, which means that every 10 years, if you simplify it, every 10 years it goes up 7.2% of the time. So that 2.8 years is where your worries are going to be. But those 2.8 years are the years where you make lots of money because you have to reevaluate your portfolio. And the do-it-yourselfer, all this stuff about Robo and I could save all this money with fees, and they get us so caught up in things like that. If you took your money, if you had $100,000 in 1991 and you invested yourself, your average return would be 6.2%, meaning you would have $307,000. If you took the $100,000 and you gave it to an independent advisor and didn't worry about your money at all, never touched it, went about your life and not to worry, and wake up in 2021, that $100,000 will be worth well over $1 million.
Wow, that's a big difference,
isn't it? Well, the S&P did that average return was 10.7%. So I always say there's an old expression in our business: money is like a bar of soap. And that's so true for that example, because the more you handle it, the more it disappears.
Right. So that instinct to tweak and change it and move it around and to do all these things that people do when they're doing their own trading and everything, when they think that they're going to get rich quick by doing some quick investments in and out. And Yeah, it does. You like your bar of soap, it's dwindling away.
They might see it like in a good year, like last year, like
Hmm.
2021, and they'll go, wow, I don't need an advisor, or I can do it
Right.
myself. But history tells us it's wrong. You need to, especially this year might be one of those years where our returns mightn't be as what it was in the last few years because of war and inflation. How do markets respond to acts of war? Well, acts of war rarely have a large lasting impact on the markets. Like I said, typically the downturn is for about maybe 4 to 5 months. And then after that, it comes back with a vengeance. You're getting 25, 30% return. Periods of like we're in right now with heightened uncertainty and geopolitical tensions. Now is the time to make sure that you have a strong investment plan that we talk about all the time to ride through this wave, to ride through the turbulence, and make sure that you're ready for the next 6 months of your life, your money life, anyhow, because it will recover. Interest rates we know are going to go up. So those are the things we know with certainty. So if you know rates are going to go up, why wouldn't you sit down now and look at your portfolio and make sure it's ready for that kind of stuff to happen? Um, it's a fact of life that rates will go up, that price of bread's going to go up, and gas and so on. So how do we see through the fog of this stuff, and what do we do? And there's many things to do. I think for me, I kind of see myself as a behavioral advisor. How does the investor behave during these things? We know how you behave during the good times,
Hmm.
but how do you behave during the bad times when you open your statement or you look at your money every day and see it's down 12, 15%? I think that's where you need an advisor, is to show you how to behave during those times. When we look back again at the last 50 years, right? There's been 29 market corrections over the last 50 years. So think back. I mean, our memories don't last very long, but think back to the last crisis was in '08, '09. And where are you today? And what did you behave like then? Or recently, I guess, the pandemic. How did you behave last year this time? Not last, 2020 this time, because everything shut down now, right?
Hmm.
I remember you and I doing the show, and what do? The markets fell like 40%. People are panicking. I
Yeah.
remember you invited me to come on Kelly's show to have a chat about what to do.
Yeah. And I think a lot of people were pretty freaked out to see that huge dive.
hmm And we were in the financial world because, well, we've never seen a pandemic. We've seen a war before.
Hmm.
But guess what? You survived. Maybe you manipulated or you tweaked your portfolio a bit and you survived. After the year after, you know, a lot of people from the shows or clients, they went out and they borrowed money and they put it in the markets. It's not for everyone, but there's so many things you can do to take advantage of what goes on in the world. Imagine you're 55 today, right? In your 50s, and you've got 10 years, 12 years to retire. So what do I do? What should I do? Do I sit and panic, or do I take a look forward and see what is my money life going to look like? Am I going to have enough? What's my return I'm getting? Like I say, how we're going to behave when interest rates go up three more times for the year, right? Sometimes people say when the markets go down, they say, yeah, I know all that history stuff, right? That it comes back. But this time it's different. I feel
Right.
this time it ain't going to happen. And you get that all the time, right? So I think it's our job as advisors to sit down with people and kind of listen to what they have to say and how do they feel and address those feelings and move on. And I think this year is probably one of the most important years where you need to revisit your plan if you have one. You need to, Am I keeping up to where I want to be? Um, is this invasion or interest rates going up and inflation, how is it going to impact me down the road? Do I need to be a little bit more conservative or a little bit be more aggressive? So there's two types of thoughts out there about what to do with your money when inflation comes around, right? And you can go back to 1982, 1983, around then when this happened, and see what people did back then and what happened between those 40 years along the way. And use some common sense. We don't have that anymore. We've lost it. But get some common sense in there and you'll figure out, this is a great decade for money because of all these things that are happening to us. So if we embrace, instead of worrying, if we embrace the financial markets, and maybe after the break we'll go into, what's the two thoughts out there about our money? And you have to figure out, what do you believe and where do you want to be, right?
And it's hard for us sometimes when we're dealing with our own money and our own savings and our own investments, our own families, to think objectively and to think rationally. The calm, careful, rational person who is acting in good times, as soon as things get a little dicey, we kind of panic a little, we go a little nuts. And that's why it's important to have a good financial advisor in your corner, someone who can objectively look at these things with the lens of history and move forward with your money in a way that will make sure that you still have some on the other side. Like if you look at where we were 2 years ago, if you were in the dip and you sold during that dip at the beginning of the pandemic, you're probably still trying to claw your way back. Meanwhile, if you just rode the wave, you're riding high, and it's like it never even happened. So there's a lot that you can do, not to just leave it alone and ignore it, but tweak things, especially in a time right now when things are changing with inflation, with interest rates, and with the invasion in Ukraine. There's so many things that are sort of playing at our money. It's important to take a look back at your finances and see exactly what's in your portfolio and tweak it to navigate and ride that wave so that you're doing better on the other side of all of this. Don't forget, you can visit Kelvin's website, askkelvin.ca. That's askkelvin.ca. A whole lot more of your life, your money continuing here on 640 Toronto.
You are listening to a paid commercial program. Unless otherwise identified, the guests on the program are employees of or otherwise represent the advertiser. The opinions expressed therein are those of the advertiser and do not necessarily reflect the views and policies of Global News Radio 640 Toronto.
And thank you so much for making us part of your Sunday morning. No, money for nothing. I don't think that often happens in my life. I haven't just stumbled upon a bag of money. I'm waiting. I've got my eyes out for it. I used to, what I used to do? You go to the ATM machine that's at a bar or something like that, look around the floor. Drunk people drop money all the time. That's the only time I've ever had money for nothing. But I don't, I haven't been sort of handed a good chunk of money for nothing at any point in my life. Actually, I stumbled upon $100 bill once. So I'm a lucky guy. Well, I gotta count my blessings. I'm a lucky guy. That's pretty good.
Well, it's funny you say that. That song's really appropriate because you could get money for nothing because interest rates are so low that you could. I'm telling you, this is a very interesting time in history. We've never been this low. There's a lot of money in the world. We've never had so much money in the world ever before, and we, as the simple people, should take advantage of it. There's a saying, again, use other people's money to help you make money. And then when you're done, give it back to them and move on. And that's why there's money for nothing. I'm telling you.
You know what, Kelvin, you mentioned sort of in passing in the last segment talking about borrowing money for investing. And I know that that's always something that's interesting. And I know we're worried about interest rates going up. But I was actually talking to a mortgage broker last week who was saying if you've got a variable mortgage rate, there's a good chance that you can sort of withstand like 7 changes or something like that. Yes. I'm not a financial guy, so I'm sort of taking his word for it. But interest rates, even though they're going up, they're still at historical lows.
Yeah, rates have to go up quite a bit before it'll affect most people. Some people will affect, but the majority might not. And that's because money is so cheap. Think about this. we would go, what's the average price of a car, you think? 40 grand?
Something like that. I think that
Yeah,
obviously the sky's the limit, but
yeah,
you can spend a lot more than that. But I think the average
yeah.
person's probably paying something
So
like that.
say the average car is 40,000. We have no qualms about going and borrowing 40 grand to buy a car, right?
Hmm.
And pay, I don't know, 400 or 500 bucks a month, right?
Yeah, that's how a lot of people do it. Right?
But what happens to that $40,000 car in 5 years from now? What is it worth, do you think?
At
20
least
grand?
half. Yeah.
Yeah. But yet we won't take the same approach to our money life. Now, borrowing money to invest is something not for everyone. So you have to make sure, you sit down with your advisor and make sure it's appropriate for you, right? But think about this. You borrow 40,000 and you put it into the markets now. The markets are down about pretty much 15%. Do you think it's going to come back to 15% in the next year or two? Well, of course it will. The interest that you pay on the 40,000 is tax deductible. So you get a tax deduction, right? So what happens in 5 years from now, where do you think that $40,000 would be? 20,000 or 45,000? So that's the thinking we have to change. We we have to stop thinking about our feelings. Who cares about when it comes to money? When we read with feelings, or we listen with feelings, or we invest with feelings, we already know what the outcome is because your feelings are telling you, yes, it's going to be bad, or yes, it's going to be good.
Hmm.
So when it comes to money, lose your feelings. Have no feelings. Just use common sense and use logic, and you'll be fine.
Well, it's
Right?
funny because we don't use common sense often when we're thinking about money. Because if we did, we would be, borrowing to invest more often than we're borrowing to invest in a depreciating commodity like a car,
Mm-hmm.
right? Like we need
Yeah.
them to get around, but we decide, well, we're gonna, take out a loan in order to do this, and you think about the interest on that loan. You think, well, I can afford to pay that. Well, why not do the same thing with your investments? And that's not something that I sort of encourage people to try and do on their own, because I think that that's exactly the situation where you need someone like Kelvin on your side,
Yeah. Yeah.
where
That's
if
a
you've got someone to sort of make sure that these calculations you're making are not emotional,
or
right? What do
yeah.
they say? The market's driven by fear and greed. Those are two
Right.
not fun emotions in most
Hmm.
people's
Well,
situations.
think about this with inflation. There's two thoughts with inflation. So, when we get inflation, the one constant thing, no matter how you think, is don't invest in fixed income like GICs and that kind of stuff, because inflation, we're going to hit like 6, 7%. So if you're earning 2%, you're really losing quite a bit of purchasing power of your money, right? So that's the one thing you want to not do. Doesn't matter how old you are, to be honest with you. So when we have rising inflation, things like energy and metals are very attractive to everyone, right? Resources, because that's what happens. That's why our TSX is up 1% and the S&P is down like 15%.
Because the TSX is
So
very resource heavy. It's a very
yeah,
resource heavy market.
yeah. Yeah, and look at the price of oil, right? So that's why it's reflective of what happens. It's so funny how the markets are reflective of what goes on in the world. So while investors will look for resource companies and so on, it just goes to show that when all the supply chain breaks out, when we start getting back parts for cars and things like that, and the bottleneck kind of disappears, inflation pressures will ease as we get back to life. Everything opens up, and we get things again, and the economic growth will take hold, and that'll push equity prices up, and eventually bringing down interest rates and inflation to the pre-pandemic, back 2018, 2019 levels again. So those are some of the things. If you believe that's going to happen, readjust your portfolio to take advantage of that. The other side of the coin is all these inflationary pressures are embedded in the economy, and inflation will go up, reflecting, all kinds of stimulative policies by the government. and the conditions of the wealth market will deteriorate. So equity markets will be weakened. All the things that we think about in the last 2 to 3 weeks will happen, and it will discourage a lot of investors from participating in the overall markets. So all these things, so what do you do as an investor? Well, what you do depends on your age, depends when you will retire. Do you have a work pension, your debt load? All those things will have a great influence on your decision. Remember, if you fast forward your life in 5 years from now, will the stock markets be higher or lower? What are the chances? Well, the chances are it'll be higher because companies are making money, prices are going up. So if you're McDonald's and the price of your Big Mac goes up, well, guess what? Your stock value goes up. Someone was telling me that Tim Hortons coffee went up, I think 7 cents or something. I'm not sure. I'm not a big coffee guy, but someone was telling me that. So it just goes to show if inflation comes up, stock values of companies are going to go up. So it's really, and you and I talk about this all the time. It's almost as though when it comes to money, we need to think the opposite. Just do the opposite.
Mm-hmm.
And if you do so, yeah, and
work for George.
And you'll be fine,
I mean, Kelvin, it's interesting when you say that, when you think about when you look in 5 years, will the market be up? What are the odds? When you look at a chart of most stock markets, you see basically, as you zoom out and spread it out over time, you see a rising line with some blips. And those blips can be really scary in the moment, but in the long term, the trend has been upwards. And, there's too much sort of, personal self-interest in making sure that we all achieve more and more and more. That rising tide raises all ships, and there's always going to be a trajectory in that direction, so long as free markets maintain, so long as people are able to freely spend and save their money as they wish. And I think in a time like this, when we're in a bit of that blip, when we're in that downtime, you got to think, is this time to sell or is this time to buy? And right. I think, a lot of us have made the mistake to lock into something like a GIC when times have been bad or something. And then you find yourself, you didn't do anything to make more money when times were bad. And that's something that people have to think about. And we'll talk a little bit more about all of that as the show continues here on 640 Toronto. Don't forget, you can visit his website, askkelvin.ca. That's Kelvin's website. That's the guy we're talking to, Kelvin the Money Guy. askkelvin.ca. And you can give him a call anytime at 416-457-7526. That's 416-457-PLAN. Whole lot more of your life, your money, continuing here on 640 Toronto.
You are listening to a paid commercial program. Unless otherwise identified, the guests on the program are employees of or otherwise represent the advertiser. The opinions expressed therein are those of the advertiser and do not necessarily reflect the views and policies of Global News Radio 640 Toronto.
There's no such thing as a money tree. I tried planting some loonies once, and all I got was some dirty loonies. So you got to find some other things, some figurative money trees, some figurative ways to start growing your money and your finances. And that's why it's important to have someone like Kelvin on your side. Kelvin, the Money Guy, is one of the top financial advisors in the country, and you can book an appointment to talk to him by visiting askkelvin.ca. That's askkelvin.ca. You click on the schedule a call link in the top right-hand corner, and you can book a time of your choosing, a date of your choosing, when Kelvin will give you a ring. And you got him uninterrupted for half an hour to chat with him about all these things that we talk about here on the show and everything else in a more specific way, in a way that really breaks down what your needs are, what the needs of your family and your investments are. And a time like now is a pretty important time to have a financial advisor on your side.
It takes about 15 minutes of a chat to figure out, can we help you or not, or are you in the right track? And do it yourself if you wish. But many times I find people really need somebody to talk about, despite the prospects of a setback in the wealth markets, in the coming months. We're already in it, and it'll continue probably. So whether it's temporary or longer term, firms like financial advisors are better positioned to support you in these challenging conditions, right? Because we take an outside view, we don't have no emotions attached to your money. So with all the turbulence now, and like I say, over probably the next 6 months or so, you should realign your portfolio. Sit down with your advisor or give me a call and get ready for the next 3 to 10 years of your money life. I believe there's great times ahead for your money, but it depends on what you do today. So people need to remember there's always opportunities in chaos. And we're in chaos right now. So, you better sit down and always take advantage of these situations. It's not going to last forever. It might last for 6 months, even a year. But in the scope of things, does it really matter? Really doesn't matter. What matters is you. How do you feel? How is your behavior? How are you behaving through the ups and downs of the stock markets? And talk it through. Whenever you have a problem, what do? You talk it through, right? So if you think you have a financial problem or you're not on course to get to where you want to get to, then sit down with your advisors. That's what they're there for. They're there to help you, to guide you through all the maze of stuff that happens in our lives. And a lot of us do a great job. Sit down with them and address where you're heading. And if you need to tweak your plans, go right ahead, because that's what these kind of things are for. So I would say, Chris, people listening should really, instead of thinking all the bad things, think of all the good things ahead for us. 2 years ago, it looked terrible in March, well, St. Paddy's Day. Now we're getting back to the parade. We're getting back to going out. We're heading into April. The Leafs probably will be in the playoffs, but not make it through the first. Like a lot of things that happened before.
Sometimes history repeats itself.
But you know what? I'm kidding. I think we need to stop, take some positive attitude about where we're heading. The nice weather's coming. We're going to be daylight again. Revamp your portfolio. Look forward for the next, little while, and we'll be okay, right?
Awesome, Kelvin. Thank you for finishing on a positive note there, because there's a lot that we can look forward to and a lot of opportunity that's presented in this chaos that we're living through right now. So remember that there is a silver lining to that gray cloud that you may be seeing. And the best way to find that silver lining is to have a financial advisor on your side, someone like Kelvin, the money guy. If you have an advisor and you need a second opinion, give him a call. If you don't have an advisor, you're going it alone and you want to sort of know if you're on the right course, give him a call too. You can book a meeting with Kelvin by visiting askkelvin.ca. That's askkelvin.ca, or you can call him anytime at 416-457-7526. That's 416-457-PLAN. Kelvin, thanks again for another great Sunday morning. And I remind everyone, we're coming up to the 10 o'clock news. So if your clock is not set, make that tweak now. That's the first tweak that you can make, and then you can look at your portfolio and enjoy the rest of your week. Please stay tuned to 640 Toronto.
The preceding was a paid commercial program. Unless otherwise identified, the guests on the program are employees of or otherwise represent the advertiser. The opinions expressed therein are those of the advertiser and do not necessarily reflect the views and policies of Global News Radio 640 Toronto.